Okay, this is Brian Stoll for Timing Strategies. Thursday, the December the 5th. Wanted to go over this real quick. This is the last time I'm going to do this. Okay, so we took off our long positions, the last of our long positions. We were 90% long as of here on the 19th, excuse me, the 20th of November. 100%, excuse me, we were 100% long. We took 65% of that long position off here on the 30th of November, and we took 65% off here. We took the last 35% off here. Ultimately, we're looking to set up for a short position. Where that short position gets initiated, was it today? No, we didn't. Looking for a little bit of potential follow through on tomorrow, depending on how they react to the jobs report. Plus, we got the Fed meeting coming up next week. But I am looking for a top in the market somewhere starting today up until Tuesday, Wednesday next week. The one point I want to bring up is, or a couple of points, is that for those of the idiot wave persuasion, idiot wave, Elliott wave, and I'm just another one of the idiots. We've got a perfect ABC pattern that has come up into here. Is that going to stop it? I don't know. It stopped it for the day. I'm looking for a little higher move, at least maybe a doji day tomorrow. Another interesting point that we have here is if you take a look at the move down from November the 6th, we had a 7.5% move that took us down for a period of about 14 days. So from November the 6th until November 26th, again, it's 14 days down, 7.5%. If you take that move from the lows back up to here, again, perfect 7.5% move so far, but it's only taken 7-8 days. So the time cycle value is becoming much longer to the downside so far than it has taken to the upside. That's what you might call left translation. For those of the Walter Brezert fans, I'm one of the students of Walter Brezert. So left translation starts to begin the change in price and time dynamics that, okay, this is starting to really look like a bear market rally. And so again, that's why we're looking to get those short positions initiated. If you take a look at the TYX, which is the 30-year government bond interest rate, we are short government bonds, so that means we're long interest rates, rising rates. That's starting to look really good. We got long on the 29th, and so far that position is starting to pay off. We are also long the US dollar, which is in conjunction with that short interest rates or long interest rates, short US bonds. I'm looking for a move back up to about the 78.5, as high as the 82 level, 82 cents on the dollar. I'll settle for somewhere in between of about 80 cents, but again, the initial target should take us at least up to about 78.5, and we're long 2 beta, the Ridex in there anywhere between 10 to 20%. The last point I want to bring up is on gold. If the GLD is in basically a position of contraction right now, that means that the range is getting tighter. Where is it going to break? Ultimately, I mean, I believe I'm a long-term buyer of gold. I believe gold is the only place you're going to really want to have your money, gold and oil, over the next many, many years. But in the short term, the long term is made up of a lot of little short terms. If we can get a break above the highs and a close above the highs of that 81 to 82 level on the GLD, yes, will be more of a buyer of gold. The problem is that look at the mining stocks, the GDX, they're not getting the kind of appreciation that the actual metal is getting. And that kind of gives me a little hesitation. Long term, again, bullish on gold. Short term, intermediate, a little bit of hesitation, and that's where the artwork comes in. Last point I want to bring up is the XLF. Boy, oh boy, I'm licking my chops on this one too. I'm looking to get short this thing somewhere right around that 32 level. Where's the idiot wave on this one? Somewhere right around, potentially maybe starting today or up, who knows, the next day or two at that 32.5 level. But again, I'm scaling into that. I haven't done it yet, but I'm looking to do so. Next index I'm looking to probably get short is the IYR, and that is looking even better. That bailout garbage that they're talking about in real estate, you know, that whatever Hank is creating and everybody else in the Bush team, I just, you know, eventually that's just giving everybody, that's giving anybody who wants to get short real estate or financials just another golden opportunity to do so. Where will I look to get short on real estate or the XLF? You know, basically somewhere starting in around here. We'll see what happens tomorrow with the jobs report and how does it play out. How are we going to get short the real estate? Well, we're going to use the 2 beta ETF SRS. And again, if we want to get short the financials, look at the XKF. We don't have those options available necessarily in the RIDEX end of day system, but these are two that we use for our managed accounts using ETFs that we are going to initiate here, and we're looking to basically get initiated. Again, the negative correlated financials and real estate fund. Other than that, give us a call, send us an email if you have any questions. I appreciate your comments and feedback. And Merry Christmas, Happy Hanukkah to everyone. This is Brian Stoll for Timing Strategies, Thursday, December the 6th. Have a good night.